Good afternoon, Sage here, reporting to you live from the 𝐊𝐿𝐴𝐚 studio, and it's lunchtime here in Sydney, and you know what that means. It's time for the Mid-Market Pulse. And in this show, we'll take a look at the Australian share market's performance, winners and losers. In the final segment, we'll focus on the stocks that grabbed the headlines today. The Australian shares slipped into negative terrain by lunchtime, pairing the opening gains amid the broad-based sell-off, and the market witnessed choppy trades as gains in materials and the energy stocks were offset by a sell-off in the financial and industrial companies. Investors also reacted to corporate earnings reports of some of the big companies such as Fortescue, Nuix, Invacare, Altium, Crown Resorts, Freedom Foods, Duratec, Booktopia, Healius and others. The ASX 200 was trading marginally lower by 1.60 points by lunch, and earlier today the index opened higher, tracking firm cues from Wall Street, which closed on a strong note on Friday after Federal Reserve Chairman Jerome Powell said the central bank won't be in a hurry to raise interest rates. Speaking at the Jackson Hole Symposium on Friday, Jerome Powell said that the economy has started showing signs of recovery and the central bank would go slow with the bond buying program it has been making every month to support the economy. Currently, the bank injects $120 billion every month into the economy through its bond buying program. And moving on now to the sectoral front, 9 of the 11 sectors were trading in the red zone. The consumer discretionary sector was the worst performer with 1.15% loss, followed by financials, which dropped over 1%. Among others, telecom, industrials, tech and healthcare were also reeling under the selling pressure. And meanwhile, the materials sector was the best performer, rising 2.5% by lunchtime. The energy sector was also trading higher by 1%, owing to a rise in the crude oil prices. And on the COVID-19 front, New South Wales has reported 1,290 new local cases on Monday, the highest number ever recorded in a state in one day. And 4 deaths, sadly. The virus is spreading rapidly across Sydney, but particularly in the Sydney southwest and western suburbs. Meanwhile, New Zealand reported 53 new cases of COVID-19 on Monday, all in its biggest city, Auckland, taking the total number of active cases in the latest community outbreak to 562. And let's now turn our attention to the biggest gainers and losers in the mid-market session. Software firm Altium topped the losers chart by falling over 10% by lunchtime. I'll share some more details on Altium in our next segment. And some of the other notable losers were the tech firm Nuix, superannuation business Hub24, healthcare firm Healius and energy company AGL Energy. Meanwhile, Invacare, that operates funeral homes, cemeteries and a crematoria, emerged as a top gainer by rising 6.8%. And some of the other top performers were iron ore miner Fortescue Metals mining company Orocobre, mining infrastructure service provider Mineral Resources, and another miner South32. On this note, next in our segment, we'll shift our focus to the shares that grabbed the headlines today. And the software firm Altium shares tumbled over 10% after it released the earnings report. And the company, which rejected a takeover bid from the US giant Autodesk, reported a 246% growth in profit in the financial year 2021 as compared to the same period last year. The revenue rose by 6.4%, while EBITDA dropped by 2.9%. The tech firm also raised its final dividend to 21 cents, up from 19 cents a year earlier. I do have more trending updates to share with you, but for now, let's take a small break.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news.
We cover it all on our news segments.
Be on top of the latest news
with 𝐊𝐿𝐴𝐚 TV.
I'm Sage reporting to you live from 𝐊𝐴𝐚 studio. You're watching the Mid-Market Pulse. Let us look at more of those companies that are in the news today. Shares of the blue chip miner Fortescue Metal Groups were trading 5% higher after posting record annual profits, and the Australian iron ore miner has reported its highest ever profit and dividend for the financial year 2021, driven by higher steel prices, robust performance across the supply chain and strong customer demand. The world's fourth largest iron ore miner posted a 117% growth in underlying net profit, and the revenue surged by 74% in the financial year 2021 as compared to the prior year, while the underlying EBITDA rose by 96%. The company also reported its highest ever annual shipments of 182.2 million tonnes. Boosted by strong earnings, it declared a franked final dividend of $2.11 Australian per share, increasing total dividends declared in the financial year 2021 to $3.58 Australian per share. And the shares of the casino operator Crown Resorts were trading 0.7% higher after it unveiled its annual results. The company's statutory net loss widened to $261 million Australian dollars in the financial year 2021 as it gambled and entertainment operations at its Melbourne and Perth properties were badly impacted by the COVID-19 pandemic. It incurred closure costs of 120.6 million Australian dollars during the year between Crown Melbourne, Crown Perth and Crown Aspinalls. Crown Resorts revenue fell by 31.3%. And the foods manufacturer Freedom Foods has narrowed its net loss to 38.8 million Australian dollars in the financial year 2021 from 136.4 million Australian dollars in the prior year. Revenue rose 8% to 559.1 million Australian dollars, while the adjusted operating EBITDA from continuing operations improved 22.4 million Australian dollars versus a 54 million Australian dollar loss in the prior year. And as the end of the June quarter approaches, the company had cash on hand of 31.7 million Australian dollars and gross debt of 349.9 million Australian dollars. And the share price of Duratec dropped over 9% after the national specialist contractor released its earnings report. The company's profit declined 45.2%, while the revenue dipped 4.7%. And the earnings were impacted by slower contract awards in the wake of the COVID-19 pandemic. It also declared a final dividend of 1.5 cents a share. On to the next, the online book delivery business Booktopia saw its shares slipping over 6% post-earnings announcements. The loss widened to 18 million Australian dollars in the financial year 2021, while the revenue rose 35.1% to 223.9 million Australian dollars. Also making the news, shares of Healius fell over 4% after the Australian healthcare company reported robust annual earnings. The net profit for 2021's financial year rose by 179%, while the revenue rose as well to 1.913 billion Australian dollars compared to the year ago period. And the company has also announced to pay a fully franked final dividend of 6.75 cents a share. The company had declared no final dividend in the financial year 2020. And thanks for joining us on the report. That's a wrap for now in the Mid-Market Pulse show, but please do stay tuned on 𝐊𝐴𝐼𝐴 TV for more of the trending market updates. This is Sage signing off.